Good day, ladies and gentlemen. I can see we have already some attendees coming, and perhaps as others are joining, we could proceed to the content. So thank you for showing up. By the way, I will be reading the comments in the chat. So if you have any questions at any moment, please write them in the chat, in this Zoom chat, and I'll be happy to respond. And then I guess otherwise we can proceed. So we have scheduled 2 hours for this session. So in case everybody will be available for all this time, we'll keep going and show you first an introduction about Invest for Excel software and its functionality, and then the use cases for it, and the best practices of financial modeling that it represents and establishes in organizations. Okay. So after some slides, we will look at the actual software example calculation made from scratch, so that you can see all the functionality used from very beginning until the real project that you could potentially work on in this software. Okay, before we go into actual software, a few words about the company behind. So Invest for Excel was developed by a data partner, a company from Finland, and the company has been around for more than 30 years, since 1987. And since this beginning, the focus of the company has been financial modeling. It was first a consulting company, then turned into a software company. And once it turned into a software company, we have basically focused on standardizing this model for investment analysis, for stability study, for valuation, all based on discounted cash flow methodology. So it's something that has become #1 thing of the company, and it's only one software product that everything revolves around. So today we have a network of partners that represent us all over the world, and we're also technologically Microsoft partner, because that's what everybody's using. Everybody's using Microsoft Excel for their modeling, financial modeling needs. All right. So here I have a slide about where the customers are coming from. As you can see, it's a very diverse mix of industries. So it's just to illustrate that the same standard software can be used by any type of business. Whatever business you have can be modeled easily in the same standard Invest for Excel software from the beginning, from the status quo until you got your business. That's what has been our priority, to keep one version flexible enough to model any type of business. And our customer records actually show that it is the case. Here are some more customer references. So basically, we have some strong names from almost any industry, like Neste from oil and gas, or like Fortum in power and heat, KGHM in metal, one of the biggest in the world, metal companies, paper, food and beverage, and well, automotive, logistics, transport logistics. We have some municipal government customers and many other diverse industries. So and we're not just talking about the big organizations. Some of our customers are small consulting firms that actually serve usually bigger customers, but it overall it varies from almost representing all sizes. if you're interested, you can also take a look at our customer references in more detail on our website under datapartner.fi/customers, where we list them by country and by industry. We of course only list those who we have permission to publicly show. So it just shows most of them, but not all. So Invest Excel has also been well received in the academic world. We have some of the great universities that teach bachelor programs, master programs of different topics. It could be hotel management, or it could be economics or business administration. It could also be almost anything, because now many topics actually have the financial modeling component in it. So whatever you do, it's really good to be able to calculate feasibility, whether something will be feasible financially. And of course, it needs to be done from a cost of capital point of view, from basically discounted cash flow point of view, because you always need funding, and funding always has some interest. So you need to make sure to get it right. So it's very useful in almost any field, and it's been really well received because of the way Invest for Excel works. It sort of guides you step by step in the right working order. It doesn't matter if you're a very beginner and would like to learn this best practice. It works very well for that situation. Or even if you're an expert of financial modeling, still Invest for Excel can be great because it automates some of these manual steps that you would have to do otherwise, and lets you focus more on those things that software cannot automate. So where you really need to think it through. So it really is universal in that sense. All right, so application areas. So there is a wide range of application areas what Invest for Excel is used for. Here are some highlights. So for capital budgeting overall, what's the best possible way to allocate the available budget with the best return on investment? Some sort of problem that every company has. And Invest for Excel works very well for that. That's actually maybe the original main purpose of it, how to allocate the budget in the best possible way that gives best return, how to compare different scenarios, and only pick the ones that promise the best returns, and so on. And then business planning overall. So how to plan operations, what to do when, what can we do, and so on. So business modeling. You can do evaluation of business to find out how much some business or a part of business is worth. And then if you add acquisition price to the evaluation, then it becomes an acquisition calculation, whether it's worth to pay this kind of money to buy this business or to sell this business. And then even such complex calculations as mergers can be made with Invest for Excel when you consolidate two or more businesses into one. There's actually a very advanced consolidation function in Invest for Excel that allows you to consolidate, well, even hundreds of projects if you wish, into one, and you can then continue analysis on consolidated level. So you can actually look at the bigger picture. And then in case you just want to merge, let's say, two businesses, then it has some functions like elimination of internal transactions, which is important to take into account, and some other things that make it a good tool for this kind of scenario. So then cost benefit analysis. So when you just compare different cost structures without necessarily taking into account the income part, maybe there isn't even any income part. It just you have to comply with some government regulation about maybe some environmental standards. So then you just need to buy the equipment or whatever it takes to comply. And of course, government customers may be using this cost benefit analysis scenario to compare different projects from cost point of view, like building the road or whatever it could be. And then life cycle costing for products, so calculating lifetime of the project or product. and then cash flow modeling of projects. So this is also kind of universal. Whenever you have some, you want to know how much cash the project will generate. Are you using? Will it have enough cash on in a bank to cover all the costs, and then will it maybe then have some at some period in the future too much cash on the account, so you could actually use it better by maybe repaying some loans or reinvesting it into the business. So that helps to keep an eye on that. Impairment testing is another powerful feature that allows you to compare book value of the goodwill with NPV based valuation of goodwill. So basically, this allows you to usually write down the value from the books based on up-to-date NPV based calculation, so that it could help you pay less taxes maybe if you write off some part of the value as loss, or it can also improve some some KPIs that you use, maybe something that depend on your assets. And then financing. So even though financing is not part of the feasibility study, the return rate of the project will be the same regardless regardless of source of financing. But usually, after you selected the project with the most return on investment, then next step is to actually model financing for it. And that's why we have here quite advanced financing module available that allows you to load all the financial cash flows, actually all the normal cash flows from the file into the financing file. And then it helps you to model precisely the right type of financing, or even combination of different sources of financing according to your needs and capabilities to repay. And then once you're done modeling the financing, all the withdrawals, repayment, interest payments, amortization payments, and so on. Oh, sorry. So then you can, with yet another click, import the financial cash flows back into the calculation file, and it automatically appears in all the reports, in income statement, in cash flow statements, in balance sheet, and so on. So very handy. It's only part of the enterprise edition, by the way. Okay. And then post-audit calculation. So something we recommend doing also is you can use Investor Excel to do the follow-up calculations. Let's say 1 year later, after you did some project. So you have already old file that you used to calculate initially the project 1 year ago, and then you can save it under new name and update it with a new set of data that you have accumulated over this 1 year of operation. So now you have two files, and you could compare and see whether your forecast was right, or did you need to do you need to was it very, very different from your forecast, the reality, so that you can then adjust future forecast accordingly. Or then, of course, you can also make decision about this project, whether to keep it or maybe to make it even stronger, or to keep it as to cancel it. So whatever is the right situation, but you can only like be sure that you're keeping track by doing this kind of regular checkups on your ongoing projects. And then product calculation is another potential use case when you want to find out how much money to price to charge for your product or a service per unit. Like this applies to also almost every situation. That we have some cases of customers that were government, municipal government owned, like electrical grids, and they have a lot of regulation, often how much they can charge, and actually they are even getting punished by government by law if they make, for example, too much profit. So then they have to very precisely price so that it just barely covers their costs. Just an example where it's important. Or of course, overall, you can just want to know what's break-even price, how much margin can you make, and so on in a for-profit scenarios. All right. And there is more, of course. It's just some examples. So the base is always the same, that there is discounted cash flow based valuation, where you take into account the cost of capital, the period that the planning horizon, which could be I know half a year, could be 40 years, depending on your situation, and then you put all the investments that you need to make in order to make this project happen, depreciation rates, withdrawals, when do you need those investments made in time, and in which amounts. And then you model income, you model the costs, variable, fixed, you model working capital, and then you analyze it. And basically that's the whole schedule. Okay, I will not get into every detail here, but well, there's just like a sections splitting different like functionality areas. Creation of financial model, then analysis part, different methods and reports that we could use for to perform the analysis. Then there is a sensitivity analysis part, and scenario comparison, financing, and some more reporting options. Okay, here's another slide about why companies are choosing Invest for Excel. So the value proposition, basically, almost every company that we have approached had some similar situation, that they had self-built Excel spreadsheets that were used for the same purpose. And the quality of those varies a lot. So in some cases, it's really good. In some cases, it's not so good. And but at least always there was at least some of these kind of disadvantages, like weak sides, like because those were non-standardized calculations. It was time consuming to manage. Like imagine if you have a model with many sheets, many formulas, many links to other sheets, sometimes links to other files, and it takes forever just to check, like especially if you, let's say, are not familiar, you want to get to know how does the model work. It can take a lot of time, and it's very difficult to notice some mistake in those. And then there is always some uncertainty about correctness, because it's physically impossible to check it all the time, and be sure that nobody has changed something. So all of those, by the way, become much worse as soon as there is more than one person involved. And that's usually the case in a bigger organizations. When somebody needs to make it, somebody else needs to check it, somebody else needs to make decision, review it. So, or sometimes even as several people take part in preparation. So then you can really never be certain that somebody didn't edit something like without like you noticing it, and you still count that it still works as it used to be working. But so yeah, and yeah, overall transparency. So this is a big issue, like just to find out how the numbers are built in a typical model can be very tricky, and so on. So probably some of it may sound familiar. And how does Invest for Excel, how Invest for Excel addresses those issues? So first of all, it establishes a standard, so that every time a calculation is in the same format, you know where to look for which type of numbers, and that alone already makes it easier to spot a mistake, makes it easier to prevent a mistake, easier to find it. And so once you get used to this format, it definitely saves time of everybody who is involved in working with the file. And because it's built based on these best practices that we have accumulated over all these years working with thousands of companies. So this is really like, in most cases, we have the best possible way to do some certain feature, because we have heard it based on requests like how users prefer it to be and how it's really more convenient to have. So yeah, we have also some built-in transparency features that make it, again, very easy to read the calculation to see where the numbers are coming from. Again, this helps to spot a mistake if there is one. There is also built-in comparison features that allow you to compare even totally different investment projects with different timeframes and so on. So you can compare. And of course, because there are so many users using this same model, that also adds some extra layer of kind of assurance that this, should not have the mistakes or errors, because errors definitely happen in everybody's models, even in our model. But if it's the same model that's used by so many users, the chance of some error coming through is much less than if some kind of non-standardized model. And then so yeah, and finally, of course, it's based on Excel, so it's familiar environment. There is nothing new to learn. There's actually no any compromise of switching to Invest for Excel, because everything that works in Excel still works in Invest for Excel. And okay, then a few details about the buying Invest for Excel. So there's 4 different editions: Light, Standard, Pro, and Enterprise. And just to give an idea, that Enterprise is the most advanced, most expensive version, and it has such things as financing module, consolidation, impairment test, valuation, perpetuity as a residual value option, and extrapolation for valuations, free cash flow to equity, point of view calculation, and so on. And so basically, Pro, for example, has everything else except for those functions. And then, well, I'm happy to forward you these slides later, so you can also have a copy and have a closer look at this functionality. And if you have, of course, any questions about any of this information that you get, I'm happy to follow up with you and answer any questions as usual. And about the prices, so as maybe you already know, but there are 2 ways to buy Invest for Excel. One is to get a license, which is a bigger upfront investment, but then smaller follow-up costs for the maintenance, for the software updates, training, and support. So which is 4,390 euros per user initial cost in case of Enterprise, the most expensive version. And as you can see, Pro is much cheaper, almost like half of the cost. So there's a big difference. You should really check what functionalities you need. And so this is a license acquisition. There's also a volume discount starting from 5 users or more. The price per license becomes cheaper. So we try to sort of encourage to get more people involved into planning process. And that's one way. And second way is to have a subscription. It's annual commitment, so 12 months intervals. Here I just mention monthly figures for just for understanding how much the cost is per month. But so in this case, there is no big upfront investment, just a recurring equal annual fee per user. And as you can see in this case, Enterprise Edition costs 2,195 euros per user per year, and Pro Edition is 1,170, and so on. So hopefully you get the idea. And the maintenance services are included in this price. By the way, if I go back one slide, so maintenance fee comes on top of these prices in case of license. So this is 25% is added. So total will be like a bit over 5,000 for this, including the first year maintenance. And after that, it just this 25% of list price per year. So much smaller annual fee, but yeah, you get the idea, I think. And by the way, this all of this pricing is also available on our website. You can check. We have a nice calculator for the cost on our website. And you can also, if you decide to get it, to submit the purchase online on our website with a credit card. Okay, so enough of the sales pitch stuff. So we could actually go to the actual software now. So basically, do we have any preferences? Maybe you can comment in the chat. If you would like to look at the wind power plant, which is my favorite case because it actually shows in a very good detail, very like easy to imagine case, like what kind of project could be calculated with there's some equipment that you need to buy and then it produces power and then we sell this power and then we have some costs and we see if it's feasible. Or then the production line is another option. Also very good project, like case when we have a producing some product and then we know the pricing, we know how much production capacity is and so on, what kind of equipment we need to buy. So it's like another case that I often show. So do you have any preference? Which case would you want to see now? Could you comment in the chat, in the Zoom chat? Let's see if this chat is working. Oh yeah, I see. Jonas, I see that Jonas commented that wind is okay. How about we have more people? Anybody else have any references? Jonas has submitted as a question. Well, but either way it works. Okay, I see. Mandy says no preference. Okay, well, since we have a Jonas expressed interest in wind power case, so let's go with that one. Thank you for the answers. And so now I will be switching towards Investor Excel software. Oh. And so first of all, basically you just have a shortcut on your desktop with Investor Excel logo that you run and it opens inside of your Excel and it takes over your Excel in a way. Yeah. So as you can see, it's replaced Excel's standard menu with its own ribbon style menu over standard Excel menu. And so this is actually a recommended way to work because you can access different sections with just one click. At the same time, if you need some Excel standard function, you can always switch to Excel menus. And then you see the standard Excel menus available, which you do sometimes need. Like, for example, in many cases, we use like normal Excel's goal seek. So it's totally usable with Investor Excel model. You can access it here. And then Investor Excel menu is available in this smaller form. And then you can also switch back to full Investor Excel menu. Okay, what else? So also what you see here is a home screen. So this is something that opens by default. And here you can also access many functions with one click. And just, well, what I could mention, like you can actually change interface language using this planet icon. There is 8 languages available. So you could actually switch even language for the whole interface or even some particular file that you're working on. Let's say let's say you want to have Swedish interface, but then you have a partner in Germany. So you can switch just that file's language to German and send it to them. What else? User manual is quite important. If you press it, it opens a PDF, which has over 200 pages. And you don't really need to read the whole thing. You can just search for the topic of your interest and see the explanation. So it's like a first line of support. There's a lot of interesting information here. And what else? Well, I guess we could start. So basically, let's go to, oh yeah, one thing in case you'll be using either test or real version. One thing to keep in mind is that actually there are two file menus. One just normal file menu, like file, and then IFE file menu. So we highly advise to use IFE file, so Investor Excel file menu, rather than normal Excel's file menu, because this ensures that it saves in the correct format. When you save file, there is, it's supposed to be Excel macro enabled workbook, XLSM, with the macros in it. And sometimes the other file menu might offer you the non-macro version. So then it wouldn't work. Basically, if that happens, you would have to and you don't have a backup copy of the file, you would have to contact us to recover like the macros functionality so that everything still works. So it can be done if needed, but yeah, there is a way to avoid it by just using the proper menus, and it always proposes correct format. All right, so we go to the new file now. And here, because I have Enterprise Edition, it offers me different types of files: new calculation file, new comparison table file, new investment proposal file, financing file, okay, and some others. We go for calculation file, and then again, it offers me some options. So whether I want asset investment project or business planning, which is like for new projects, for business valuation. Second option is corporate acquisition evaluation, which is the valuation template, which takes into account like the effects on the mother company. So the principle is still the same, but it's more suitable for the valuation scenario where you have some more components tailored for that scenario. And impairment test, again, it's also evaluation, but it's tailored for this impairment test function so that you could clearly compare goodwill with book value for NPV for goodwill, yeah, valuation. And okay, in this case, we go for the, we are actually planning a new project, so wind power plant. So I select option number 1. Well, yeah, there was also a tab for templates. So you could potentially also develop your own templates. Let's say you're frequently doing some certain type of projects, so you can actually save some pre-filled file as a template, and then have it already, easily available as a starting point. So you would save even more time this way. Okay, after I selected that option, it offers me to save the file, and now I could so let's say I'll put it here, wind power plant. It's good to give it a descriptive name. So in this case, wind power plant, let's say it will have 10 turbines. And let's say that, oh yeah, I also advise to put in text what type of file it is. Calculation file. So if you say, if you mention what type of file it is, like a calculation file, or maybe it's a comparison table file or a financing file, and so on. So then you know what type of file it is without opening it. So that's why it's good to put it here in the file name, because otherwise they all end XLSM extension. All right, maybe you could potentially add a date. Let's say, what do we have today? 6th of January 2021. So any information that may be helpful, so that's a good thing to do. Okay, so let's say we put it in a folder we want, and then we save it. Okay, next thing is Investor Excel proposes us to select the calculation term. in some cases, if we want to keep the calculation annual, it would be enough to just put starting year, let's say 2021, and then let's say we want to 10-year project, so it ends last year 2030, and that's enough. This will be like split into annual periods, but also very often we want to have more details, like when we want to have a quarterly or monthly periods, or then we want to start a project not in the beginning of the year but in the middle of the year. Then we have to select detailed periodization. And as soon as I selected detailed periodization, now we have an option to select starting months. Let's say we start in July 2021, and then I have also an option to split calculation into two calculation phases. And this is very important because it can allow us to have a different length of the periodization in some time, and then let's say monthly periodization in the beginning, and then annual periodization later when we don't need the details. This is very important because it directly affects your user experience as you're working with this model. For example, because of the discounting and every investment costs us every month that we keep it. So it's important to know in which particular months sometimes, or at least quarter, we need to make the investment. Because of the discounting, of course, it will be big difference whether we have discounted it for, let's say, 9 months or only 1 month, or maybe it was all year if we did it in January, and it by end of the year it has been full year of interest. So yeah, but at the same time, once we're done with all the investments, and we have just operation which is repeating every year, then we might not need that detail anymore. So it would just be unnecessary periods popping up every year. So then we could, that's why we have introduced this possibility to have this split into two different phases, where we could have, let's say, I'll call it construction as a first phase. And then let's say that it will take 6 months to build, from July until December, 6 months. And then interval length will be quarterly. So here is how I select it. If I want it to be monthly, I select 1 month interval length. And in this case, it will be 6 1-month periods from July until December 2021. And then if I select, let's say, 2 months period, it would have 3 periods, 2 months each. Select 3, then it would be 2 periods, and so on. If I select 6, it will be just 1 period. So then it will be 6 months in 1 period. So you get the idea. Let's go with 3 months. So it will be 2 periods from July to September, from October to December. And so we could make some investments in these time frames. And then operation phase, it will be, let's say it will be 10 years. And then we're looking at it, we'll be looking at it on an annual level, so 12 months per interval. So altogether we have 10 years and 6 months, and that's our periodization. Then there's some other options here, like if you want to end the financial year in some other months than December, you can put it to some other months. It will just break the report at that month so that you have total summaries for that particular month. Of course, usually it's December. You could include historical periods, so before July 2021, up to 6 of them. If you have some historical data that you would like to include, well, it will not necessarily affect anything, but it will be just there so that you could maybe build better forecasts, because you can look at the trend in the past and continue it into the future. What else? You can also, there's many settings. Again, I will not try to get into all details, but just some of it. So you can move calculation point in case you want the discount point to be something else than beginning of calculation, and so on. So there's many things. But let's say that we're happy with everything. Oh yeah, maybe I could mention about residual value. So this is by default, it calculates the residual column in calculation sheet. So after end of the calculation term, it just shows you how much left, how much value left in the investment table under each investment account. So after we discount it, how much is left. And basically it's like sells it at that value and then discounts it to present time and adds it to NPV. You can also choose not to take into account residual value if you want to just skip it, to have a clean, only the operational component. And then you can also select perpetuity extrapolation, especially for valuation cases. It's very relevant because it can take into account these future cash flows that you expect to have. And this is then balance between growth percentage and discount percentage. So you can extrapolate all the way to the like eternal opportunity, perpetuity, or you can just limit it to some sort of number of years into the future. You know, in case of valuation, in many businesses, most of the value is actually in the future. So that will be a very significant part of the valuation. Okay, in this case, we just go with the default option. So residual column in calculation sheet. All right, so that's the important first thing that we need to set, calculation term. And I press OK, and now the program starts generating the structure. As you can see, it's very quick, and now it's ready. So the structure is there. We never have to manually deal with table layouts or anything like that. It's all done automatically. If we need to correct it later, it's possible. We just have to come back to this basic values step and press this calculation phase button. And here we have the button, this menu again in front of us. So very easy. You have to be just careful in case you already have data entered. Then if you change something here dramatically, it of course could cause the data to be either deleted or may become irrelevant because it might not match the periodization anymore. So you have to be careful. You have to always check the data consistency after you change the calculation term. But otherwise, it's possible. And in some cases, if you're just adding some years or adding some periods, then even you don't even need to do anything with the data. It just will be still correct. All right. So that's out of the way. So what else? So basically, the basic value step, what do you do here? You enter the project description. So wind power plant, then turbines. Notice that the cells that are editable are highlighted gray and everything else is protected. So it's safer this way that you cannot accidentally change something that you were not supposed to change. So, and you can also use the tab keys to jump between these editable cells. And then what else? You enter figures. So whether it's single, thousands, or millions, depending on the scope of the project and currency. Let's say we stay with single, it will be euros as a currency. And then discount rate, again, here is something, if you already know the discount rate, you can just put it there, let's say 12%. That's it, good enough. If you're not yet sure what it should be, you can go to our calculator. So we have here this WACC calculator. So our recommendation is to use weighted average cost of capital, WACC, as a discount rate. And here we have a calculator that allows you to quickly figure it out. So let's say what's cost of debt? Say it's 10%, and then what's tax rate? Let's say it's 30. Let's say we want to have 80% funded by debt and 20 by equity. And then how much do we need to return on our equity? Okay, and let's say we want to have 30% return on equity. All right, so then that gives us 11.6 weighted average cost of capital. And there's also some hints about how the formula works and some usage. But again, I will just close it. I will not use it because I just stick with 12%. And then tax rate. So again, you could put something there, let's say 30%. In many places, you have some more settings, like in case of tax rate, if I press tax settings button, I could do some things like include positive tax effects. So if I do that, then periods with loss will be counted with positive tax, as if government was paying us the money. Of course, it only works if we have other projects which have profits. So then we could use loss of this project to pay less taxes in other projects. But of course, that's why it's off by default. If we don't have other projects, and it just keeps tax zero during this loss periods. What else? So there's more options. You can even enter tax manually, which is sometimes needed. Like we had a case in Germany where there was a very complicated tax benefit like model. So you had to like just calculate it manually. It's possible. Okay, and then also with currency. So there is some options about currency. Basically, you can actually convert base currency of calculation from one to another. And in order to do that, you just have to, well, now we have everything empty so far, but once we have all the data, we could select the fields that are non-monetary, like kilowatt hours or people, anything, kilograms, pounds. So we select those non-monetary rows, and then the software knows which rows should not be converted using currency rate, and everything else will be converted. And then you can use either one rate or even multiple rates for different periods, and you can just provide these rates. There's even a currency file that is supported to get the values. So yeah, in case you want to change the base currency, it is possible. And then you can, of course, regardless of that, have sales in different currencies or costs. You just have to always convert them to the main base currency before you add to cash flows. But otherwise, this is how you change the base currency. Well, that's always basic values. This is the first step of our work, and we have now completed everything. And now we just press next button to go to the second step. So as you can see, there is this kind of finger button, next. And now I'm in the next step, which is a contact information, more like a formality, who made the calculation and some comments. And now we can skip it. Next. So here is investment table as first place where some numbers start coming in. So third step is investment table, where we enter all our capital expenditures, and it's important to know when do we need to pay them, in what quantities, and in which periods. Notice that the structure. So as we modeled, so our project starts in July 2021. This is so-called zero period. You can actually turn it off or on in settings, but by default it's on. This is a special period that does not have duration. Like here you see months per interval. It doesn't have any months because it's just a moment in time, a moment at the very beginning of the project. And in this case, so it's 1st of July 2021. And then all other periods are showing you situation at the end of the period. So end of September, end of December, end of December, end of December, end of December. So always at the end. So in case you are wondering, like, when will this transaction be registered in a time frame? So always very end of this period. So in order to get something to the beginning of the period, so we put this zero period as a possibility. So basically, even though those two columns are actually in the same 3 months interval, but there is a 3 months in between those 2 points. So that's important. All right, and then as you can see, so just as we modeled, so these two periods are 3 months intervals. Altogether, it's half a year, and that was our construction phase. Then followed by 10 periods of 12 months, so 10 years. And as you can see, the model is so manageable, it even fits on my screen together with residual value. Because, you know, imagine if we had to had a quarterly all the way. Instead of 10 periods here, we would have 40. So much more complicated. And especially if we don't need those details, it's really helpful. Okay. And yeah, residual value is right here. It's also, by the way, you can also, well, as we looked at, you can turn it off if you don't need it, but by default, it's here. So how does it work? Let's say that we need to have a 10 million euros prepayment for our turbines. We have 10 turbines, the biggest cost of the project. And let's say we have a contract with maybe Siemens from Germany to buy the 10 turbines, and each of them costs 1 million. So 10 will be 10 million, and they require 100% prepayment in one at the beginning of the project. So 1st of July 2021, we put 10 million euros investment. And so then next thing would be to put depreciation. Let's say that the easiest way to do it would be to put it here in this field. I put 5%. And look, now we have every period some depreciation happening all the way, and then until the end, and we have 4.7 million left in residual value in 2031. And that's what is being added to the cash flows in 2031 and discounted to the present moment. So that's the easiest way to put depreciation. However, if you want more detailed way, more that gives you more control, you go to depreciation settings. And here you can actually select what type of depreciation, like straight line, declining balance, one time, declining to straight line, sum of years, and even enter manually. So you could also have an option to just calculate it yourself. So that's the flexibility that you get. So of course, most frequently used is straight line. And let's say that you want to have put like 40 years. So you could put 40, immediately it calculates as 2.5% per year. Or then you put 10 years, 10% per year. You can also have an option when to begin depreciation. So in case you don't want to depreciate right away, maybe you want to start only when operation starts. That's easy. And then also you can select which balance sheet account this investment belongs to. So it doesn't really affect anything until you have some balance sheet type based like parameters later. But otherwise, it just shows in this category in our balance sheet. By default, it marks them all to machinery equipment. Okay, and this is again, this is basic mode. Then if you press more options, you get much more stuff here. So you can then have a shift factor. Let's say if you have some equipment that is running 24/7, in some cases you can actually depreciate it more, 2 or 3 factors, depending on how many shifts it's working. So then there is some ground to depreciate it more than usual. Then you can also, let's say if you go to investment category, you can mark some investment account as reinvestment rather than proposed. In that case, it will not be part of the proposed initial amount in our like report. It will come as a future investment funded by, of course, our cash flows, but still, it's not in the sum of something that you need right now to do the project. So this is a way to mark it. It's very relevant in case you have, for example, some investment that needs to be done sometime in the future, let's say some maintenance investment. So you already know that you will need it in, let's say, 7 years or something, but you don't want to have it now mentioned because it's going to be just funded internally later. And then you can also mark it as a subvention in case we have some government subsidy or something else that that is not returnable or like generating, the cost of capital, we just could mark it. So then there is possibility to continue all depreciation plan. So let's say if it's acquisition especially, so we could have some past purchase date, and we could enter, let's say, continue all depreciation plan or carry over book value. So the options are, and then it will just continue the same plan as it was before. Okay, I'm just showing it. We are not gonna get into those advanced features. I just keep it simple. So actually, let's put it to 10 years depreciation for this case. Press OK. As you can see now, it depreciated the whole thing in those 10 years so that we have no residual value left, which is very often the case that we want, how we want it, so that we depreciate maximum permittable. Then next investment account will be construction. So let's say in this case, we want to split it into maybe 3 payments. Let's say 500,000. So 1.5 million euros is the total construction cost. And I'm just improvising, by the way, so it doesn't have to be like precise, but and we have to pay it first payment in the beginning of construction on 1st of July, second payment in the end of September, and third last payment at the end of construction in the end of December 2021. So that's how you put it. And then let's say that this we'll put some kind of smaller depreciation percentage. Let's say we'll put it like 30 years or maybe like 20 years. So yeah, 5% annual depreciation. And then we could put it under buildings and structures as its construction. And then pressing OK. And now we have a depreciation 5%, and then we have some residual value left. By the way, what I didn't mention is that you can, if you want, we overwrite residual value with anything else. Let's say that you know that you can sell those whatever it is for at least 1 million. Even here, when you don't have any left, you can actually add like 1 million euros or something, and it will be added to the cash flows, because let's say you know that you can sell it for that price in 2031, so it's totally permittable. I will not do it, but just so that you know it's possible. Okay, third account will be connection to the grid. Let's say that once it's built, we have another cost, let's say 800,000 to connect it to the grid so that we can sell the electricity. And then also this will be, let's say, put it also 20 years depreciation, and it will be buildings and structures, and okay. All right, so now we have 3 investment accounts with different depreciation settings, and that's enough for this demo case. What we could do now is we could do some maintenance. So in this investment account, investment report, I can go to settings. As you can see in settings, often this is a button right here in this blue line. So as you can see, I can actually unhide up to 30 different investment accounts, and that's the potential. So you could have 30 different investment accounts with different depreciation settings at the same time. That's the potential. In case you need even more, usually then the investment accounts are grouped together with the same asset type under one account. But of course, in most cases, this is totally enough. And what I could do, I could either open more, or I can also close, like not close, but hide the ones that I don't want, I'm not using, just to make it, again, easier to work with the model. Okay, so I've hidden them, and I press OK. And now we have only showing the ones that we're using. So very easy. And again, it keeps the model easier to work with. All right, maybe it's a good moment to save the file. And let's go to the next step. Next step is income statement So that's where most of the work happens. That's where we generate, that's where we model our business, our income structure, our variable costs, our fixed costs. So this is the most labor intensive part, but it's also important. So let's say that, yeah, the format is the same. So here is our construction period, 3 months, 3 months. And then we have operation periods, 12 months, 12 months, 12 months, and there is still a value. So it's the same otherwise. So what do we get here? So there is 10 top-level rows available for income, 10 for variable costs, and 10 for fixed costs. And what does it mean, top-level row? So that means you can either use it as it is, let's say sales of electricity. So I just give it a name, and I could put something 1, 2, 3. So that's 1, 2, 3 income, and it's immediately part of the report. So I could use it as it is. I could then spread it, and it works fine. Or I could actually, if I need more rows or more complicated structure, I can actually go to settings of this row like this and add, let's say, 5 sub rows. And now what happens, as soon as I added some sub rows, the top level row become white color. That means it's protected. So I cannot edit it directly anymore. If I try to do it, it gives this error message. So it's been locked. And instead it's using these parameters from sub rows. And by default, it adds them together, but we can also change the operator. We could tell it to add, subtract, multiply, or divide, or then it could also be an information row. If I hide the operator, that means it's just for information. So we could actually have anything here, and it does not affect the cash flow at all. It's just for information. So it's very useful to have. And then you can still, in that case, use it in formulas in case you want to write formulas or something. So that, of course, would make it affect the cash flow, even though it's not directly influencing. So yeah, so this is just for demonstration, but now I could actually show you the actual thing. So let's start modeling the case. So let's say first parameter will be turbines. So how many turbines do we have? And again, I could decide when do I start to enter them, in the beginning or maybe in the beginning of operations. Maybe let's put there 10 turbines. And very important, in Invest Excel, you don't need to use this kind of drag spreading of the number like this. So this is, of course, it still works, but there is a better way to do it. So all you have to do is still only enter first variable of first row, first cell with some parameter. Let's say like we did here, 10. And then what you do is you go to copy distribute function. I already used it briefly. So even if you don't touch any parameter here, just press distribute. It spreads immediately the value throughout the whole calculation. Doesn't matter how long it is until the end. And then what's great about this function is that it creates this kind of offset formulas, which means that they're linked to the previous cell. And that means that if I want to edit something, I only have to edit the base value, the starting parameter, and everything else will be automatically adjusted. Let's say now I change this 10 to 12, and look, all of them change to 12. How convenient is that? So that you can do all kind of simulations by affecting this only the first row, but it actually affects all of them, like all periods. So let's do something here. So 10 turbines, we have 10 and it doesn't change. So actually in this case, we could keep it as it is, like just 10, but I will show you some more interesting stuff with this on further rows. Let's say turbines. capacity per turbine. Let's say we'll have 1,000 kilowatt production capacity per turbine. And again, so all I do is just I enter this first value, and then I select this cell. I go to copy distribute, and then I just press distribute. And it spreads throughout the whole calculation. Then let's put hours per period. Because those are kilowatt per hour. So in order to know how much we would actually generate for the whole period, which is 1 year, then we need to calculate quickly how many hours we have. And here, in this case, actually, in most cases, we recommend to avoid writing formulas because it makes it complicated to track, like how does it work. So instead, we recommend to use this kind of structures, like you have sub-rows, and then you see how they're added together here. So let's say the turbines multiplied by capacity per turbine. So as you can see now, it become 10,000 because 10 turbines multiplied by 1,000 kilowatt hours. So in this case, it would be 10,000 kilowatt hours total capacity. So this is much better than writing a formula because it's more visible. You can see how it's added together. But of course, at the same time, if there is not significant something that you don't really need to see the parameters separately, like in this case, then you can still write formula. Let's say then 24 hours per day multiplied by 30 days per month and multiplied by, I could just write 12 months like this, or I could reference this 12 months because like in case we have some change in periodization in the future, it would pick it out automatically. So, and we get the approximate number of hours per year calculated quickly. So then we'll also mark to multiply with that, and then we get how many kilowatt hours actually we can produce totally maximum per year. Then I also, okay, actually, yes, because it's formula, Invest Excel detects that it's formula. And look, instead of the distribute value of active cell, it now automatically offers you to copy formula in active cell. And if I stick with it and press copy, so look, now there's that same formula is actually spread throughout whole calculation. And it's preserved as a formula. There's no offset formula like in the case of value distribution. Okay, hours per period. So that gives us hours total. And then what else? Price per kilowatt hour. Okay, let's see. It costs 14 cents. Notice that when I entered 14, which you can see here, it automatically rounded it to 0 because of the rounding settings by default. But we can change that. So there's many ways. You could, in Excel designed ways, you go to select cell, go to format, number, and here you can select whatever format it should be. Let's say general, and it's okay. You could alternatively also just use Excel's own, this Excel's like standard buttons for that same purpose, like, or if you want to make it some currency and so on, or percentage. Yeah. Okay, and then let's say that we're happy with the formatting, and then we distribute this. So this is going to be more interesting now. So what we could do here, we could add annual change because we expect price to grow over time. So let's say that we want to add 5% annual growth of our price per kilowatt hour. So I just put only one cell, so annual change 5. And then I put distribute. And now we have automatic growth calculated of 5% per year based on this starting parameter so that it reaches 22 cents in 2031. Very easy. And notice that if because they're now still linked to this first cell. So if I change like to 10 cents, look, now it's still growing 5%, but starting from 10 cents. So it's very easy to do the analysis because the trend will be preserved, and you can just change different starting parameter or apply some kind of analysis on it. Okay, I keep it now as it was 14 cents. Okay, and yeah, here's something. I could have one information field here, which we will use later, probably in costs. Produced. Okay, I forgot one thing. Yeah, this is something that so far we have been looking at a scenario that we have 100% utilization rate. Yeah, but we will actually need actual utilization rate parameter as well, because we're not going to be expecting like that turbine will be operating 100% of time at 100% capacity. Not very realistic. Okay, so how do we add one row? We go to settings, select, let's say we wanted add a row before price per kilowatt. So we go to edit, insert delete, insert rows before selected row, and press 1 and press OK. And now we have one more. And let's call it utilization rate. All right, so let's see, what do we expect it to be? Let's say that maybe will be 45% or something. 0.45, and then in this case I will want to like format it as a percentage. There's a very easy way in Excel. It's not an Investor Excel function. Just right click and put percentage button. But otherwise, the supported by Investor Excel is like go to format, number, and here's just percentage. So that's the same. Okay, so 45% utilization rate, and then we distribute it. And let's say that utilization rate will be growing a little bit. So let's put something like, let's put 5% annual growth and distribute it. All right, so now what we did, just to demonstrate functionality, because I'm not sure how realistic it is, but let's say utilization rate will be growing 5%. As you can see, it grows and it makes it to 70% within those 10 years. All right, so what else we need to do? We need to tell Investor Excel to multiply with this utilization rate rather than add it. Multiply, and immediately this sales have dropped because of it's not using 100% utilization anymore. And then, oh yeah, then we still need to tell program to multiply all of this actually produced kilowatt hours by the price. And now we're down to earth. Here's the actual sales figures based on these parameters. And they're growing. And this row I added for the information row. Let's say that we want to learn how many kilowatt hours we have actually produced. Produced kilowatt hours. Notice that I deleted the operator, so that means whatever we enter here will not affect the cash flow, just for information. But at the same time, we can use here some formula. So let's say that we multiply turbines by capacity per turbine, by hours, and by utilization rate, but not by price. So that's the point, so that we could actually see by ourselves how many kilowatt hours did we actually produce. And here it is, 38,880,000 kilowatt hours in a period of 1 year. All right, so then we can copy distribute this formula, copy formula in active cell, copy, and now we have the data for this, which doesn't affect the result, but it's something we can later link to, let's say in cost. Let's say if we have some costs that depend on how many kilowatt hours we produced, we can actually use that and link to this field. All right, let's say that this is enough for the income part. It demonstrates well. So just so that you know, you can actually have up to 99 sub rows like this, like yellow sub rows. You just go to settings and tell program to add like this, how many sub rows you want, and press OK, and it will create it. You can also delete the rows easily. So program will take care of that. And next, under each of those sub rows, you can actually have another 99 up to 99 sub rows of third level. So that means each of these top level row potentially can have almost 10,000 sub rows. So because 99 and 99 times under each of the 99 sub rows. So basically that means that you have plenty of potential here to describe any type of project of any complexity if you need it. But again, we recommend to keep it simple, so that keeping it simple makes it much easier to work with and much easier to spot a mistake and so on. All right, sales for electricity. And yeah, one more thing that you can do here is hide 0 rows or hide empty rows. So basically, hide empty rows, it selects all the rows that don't have name and automatically. So like now, for example, here is something we don't have name. So we could select them automatically. And then if I press OK, so the blue marking means that they will be hidden. I press OK, and now it has hidden those because we don't need them. So why should they be showing up? It's an important thing that we recommend doing also to keep the model as easy to work with as possible. If you then change your mind and you want to open something, so you just go back to income statement settings and unhide it by pressing on any of the rows, and it shows up. There's even more strict figure here, like select 0 rows. So if you select 0 rows here, it will automatically select all rows that don't have any value in them. So it's even more strict, not just well, actually it doesn't even matter if it has like name or not, but it will just go by the amount. If it's 0, it will mark it. Okay, so okay, hopefully that's clear. How do you control how much stuff you see? There's also one more thing. You can actually select in drop down the amount of detail that you see. So if you select like level number 1, it shows you the least detail. So now the income statement has shrunk into this kind of very compact income table field. Then you can select, let's say, level number 2. It shows you more. Level number 3, even more, and so on. So level 5 shows everything. But you can also adjust. You can go to settings, and you can actually tell Investor Excel like what rows you want to show up on each level, on which level. So this can be also used as a like report. So it's kind of important, very useful function. All right, so let's continue and enter some variable costs and fixed costs. Let's see how it's the best way to order it. Maybe let's put it under other variable costs. So I will add some 2 sub rows here under other variable costs. And on the first row, I will just link produce kilowatt hours because I will be needing this parameter for this calculation. So all I just do, I put equal sign and equals to this produce kilowatt hours formula. So I don't have to retype the same formula. That's the best practice as well, so that you don't, if you have to have the same formula twice, just make sure to link it instead of actually writing the formula twice, because this multiplies then the chance of mistake. What if you, while repeating the same formula, do some mistake, type or something? So it should stay the same. Then it will be consistently the same by linking it properly. And then I can also, even though it just equals to some other cell, I could still use the copy distribute function, and it will copy it as a formula. So now we have this data. available for us here. And finally, cost per kilowatt hour. So we have some whatever variable costs. Let's say that it will be 3 cents. Oh yeah. Let's see. Did I? Yeah. What I have not mentioned is that in Invest for Excel, it's important to keep in mind that all outgoing cash flows need to be entered with minus. Like here, the investments are all entered with minus. All the incoming cash flows, like sales, need to be entered with plus. And that's why we have this price per kilowatt entered with price with plus. And then all the costs are, of course, outgoing cash flow. So those need to be also entered with minus, like investments. So cost per kilowatt hour, I put minus 0.03. So 3 cents. Enter. Then I again need to format number. I don't go into currency settings. I just go number with 2 decimals. Okay. So now I have 3 cents. By the way, when you do the copy distribute, by default, it also, as you can see, there's a checkbox, copy cell formatting to target cells, which is on by default. So that means cell formatting, like number formatting, visual formatting, will be copied as well. All right. And how do we change it? We also could add some annual change, because not only the price of kilowatt hours will grow, but also maybe some variable costs component will also grow. So let's put the same 5% annual change and press distribute. Okay, so as you can see now, this price cost per kilowatt hour initially starts at 3 cents, but then slowly increasing all the way to 5 cents in 2031. So because we have this trend set. And then we just need to tell the program how to calculate it. So we multiply produced kilowatt hours with cost per kilowatt hour. And that gives us the total variable costs per period. Okay, very easy. And then fixed costs. Let's also put some staff costs. Let's say that we need to have some stuff working before the operation starts. So I could put here, maybe in the beginning already, since beginning of construction. Let's put something like, for 3 months, what will be the salary of our staff? Let's say that, well, I just am improvising again. Let's say that 500,000 for 3 months. And so I want to demonstrate 2 things. First is when you copy distribute, what we already did, I could have annual change. So let's say 5% annual salary growth, and I put distribute, and then now this is this is our annual, salary growth with annual growth of 5%. But there is one problem with this. As you can see, this is actually the 2 first periods are for 3 months. And jump to investment table. Yeah, and then the other ones are 12 months. So this is not the same anymore, but it shows the same. So we have to take into account length of period. And in Invest for Excel, it's very easy to do it. You just go to first cell where you enter it, and go to copy distribute again, and check this checkbox. Adjust with number of months per interval. Only one checkbox. Immediately 500,000 turns into 2.1 million. So that's the effect it does. I put distribute. And now we have, with one function, so this copy distribute, we are doing so many things. We are spreading it throughout the whole calculation. We are also adjusting with number of months per interval. So it automatically calculates the annual cost level. And also it automatically takes into account the 5% annual growth rate. And then plus, of course, copies, formatting, and everything else. Maybe I could also show you one more thing while we're here. So there is a checkbox, put annual change percentage in cell D479. If I put this, press distribute, look, now we have this 5% parameter here. And what's great about it is I can change it. Let's say if I put it to 50%, that means 50% annual growth. Look, now I just put it here and now it's growing 50%. So it was just demonstration, but 10%, now it's growing 10% per year. And of course, 5%. So in case you want to have it super transparent, like to show everyone what kind of growth parameters you're using, so you can use that checkbox and it will always show up here. Okay, perhaps that's enough. We have some income, we have some variable costs, and we have some fixed costs. So then from this moment, this report can also be used already as a report. Like we can see EBITDA per period. We have EBIT. If we had some financial income and expenses, they would show up here. Then we have other parameters, net income per period, and so on. So this can be used as a report already, as it is, income statement. But we go on, go to the next step. It's the working capital, also very important step, which is sometimes overlooked. So in some of the models that we have seen in use at our customers, the working capital was not given enough attention, even though working capital effect is very often very strong to the result. So how does it work here? So we have working capital split into 3 sections. So first section is account receivables. So how do we get paid? Do we get paid with a delay, or do we get paid in advance, or do we get paid just as we do the service or product? So 3 options. And then the second section is inventories. And third, accounts payable. How do we pay our suppliers and so on? So, and how do we use it? The easiest way to, and what we recommend also, to take into account some working capital effects, let's say with account receivables, is to put average number of average term of payment in days. So for example, let's say that on average our invoices are paid, let's say with 2 weeks delay, 14 days delay. So let's say I put 14 and I distribute this 14 without changes. Look, as soon as we have some cash flows coming in, we see some delays. So it means 14 days worth of income, in this case, all income. I can see it here in settings. It's applied to all income. If you want it, you can also change it to apply to only certain type of income in case we have different sources of income. But by default, in this case, it applies it to all. So, so then it actually delays 14 days worth of income and puts it coming in the next period. And then it repeats and so on. Very easy. So alternative way to doing it with these days would be to have adjusted balance possibility. Like you can actually manually calculate it exactly how much this, like the account receivable should be for each period. You can use either one or another, not 2 at the same time. But because the days option is so much easier, we recommend to use that because it's usually precise enough, but much easier to use. So that's our recommendation. So what you can do also, in case, let's say you have different delays for different types of income, then you would go to the settings here, this button, and select specify. So you can have up to 5 different income sources with different working capital effects. So let's say some income source, 30 days delay, other income source, you get prepayment of 30 days, or then others. So you can actually do that up to 5. So that's gives you great flexibility. Okay, in this case, I just stick with this 14 days delay, and that's it. Inventories, okay, we don't have any, but it would be, as you can see, the same. So we could apply up to 5 different inventory styles, like inventory components. And then we select here in which rows we actually describe the purchase for this particular type of inventory item. And then we put either how many days in advance we need it, or adjusted balance. Again, this would be the manual calculation, so same options. Then current liabilities. So here we can describe the same way, again, in either in days or adjusted balance. How do we pay our suppliers? Do we pay in advance or later? Again, same thing. So you get the idea, hopefully. So this is a very important part because it does have effect on the result. And the Invest for Excel makes it very easy. In this case, all I did was just put 14 and distributed it, and that's it. Everything else is done by Invest for Excel, and it will automatically also be populated in all the reports accordingly. All right, so let's say we're done with the working capital and ready to go to the next step, which is a cash flow statement. Good news is that we don't really need to enter anything here. We just use it as a report. We can see already from here that what's our income and how is it developing over time. I can drill down to income. So I can press. So all sources of income are here. Now we have only one source. If we had more, then it would be like in more detail here. I can also drill down to variable costs. I can drill down to fixed costs. I can drill down to working capital and so on. So I can see all the cash flow components. And then we have altogether cash flow from operations, total. We have assets. So basically CapEx, cash flows, so only in the beginning, and of course a little value. Then we have free cash flow. So that's all together, operations and investments together, non-discounted. And then we have discounted free cash flow. So take into account the cost of capital, the discount rate. As we can see here, it is per period. And finally, we have cumulative discounted free cash flow, which is both discounting and cumulative. So that means that as soon as it's positive, we're profitable. And I can see that, okay, in year 2030, almost last year, it actually turns positive. So it's kind of close call, but it is positive. All right. So in case we had financing file or even manually modeled financing, the financial cash flows would appear here. And then there's non-discounted cash flows also at the bottom. And cumulative total cash flow also available. All right. Hopefully get a good idea. Oh yeah, one thing that in case you were to use financing file, this is where you can actually insert it. Like you can load either existing one or start creating new one. So from financing file. Also, if you wanted to have equity financing, you can just enter it here where it comes from as a funding source. All right. Next step is balance sheet. And this is also generated automatically for you. So you don't have to do anything here to make it happen. You can drill down to different asset types. So here we have only machinery equipment and buildings and structures. You can also apply some on a group level depreciation. Yes, it was historic. Well, yeah. So you see different asset types and how the balances are changing over time. Because of depreciation, as you can see, it's shrinking. But then we have accounts receivables and the banking cash, which is growing. So in case we had some like financing, again, it would show up here properly under short-term and long-term liabilities. It will show up over here automatically. You don't even have to do anything. All right, so that's balance sheet. And next is the key financials section, which is like a blank sheet that you can use for any type of your own calculations. The benefit is that it's formatted in the same way as the rest of calculation. Here's our zero period, here's our construction, here's the operations and residual. So we can easily put any kind of own calculation and then follow the same structure as the rest of the file. We can even link to any of the reports above, but otherwise, here it is. And also recently released is a new feature called key ratios. So because we notice customers often add certain ratios here, and but they always manually model them here by writing formulas. So we decided to make it easier, and you could actually take advantage of this. So if you just press this button here at financial ratios, and there's a whole menu of different financial ratios that you could add. And just for this example, I will actually add all of them and press OK. Usually you would just select the ones that you want. And now what they're being added here and populated inside of this key financial section. So look, now we have like split by the group, like a liquidity, financial ratios, turnover related, profitability related, business risk related, financial risk related, stability related. So all of these are now showing you automatically by period. And then if you want to learn what does it mean, how it's calculated, you can see there is a hint, this red triangles. It's showing you how it's calculated. There's a return on net on assets, net profit divided by total assets. Return on net assets, RONA. Operating profit before tax divided by net assets. So you get the idea. So it's a great learning opportunity also, like to learn of some other like best practices that are used for financial ratios analysis. All right, next step is profitability analysis. So this is basically the step where you get a summary report for the whole calculation. And it's not end of the work, it's like middle of the work. It's just showing you with these numbers that you have just entered, this is how the file look like. And usually after looking at this like summary, you would go back and make some adjustments and come back here again, maybe again come back, and until you're having the results you're happy with and you have adjusted all the parameters. And then still it's not end of the work, then you just continue to perform sensitivity analysis, some charts, visualizations, some reporting, and so on. So there's more things, comparison tables, and so on. But let's look at what we have here. So while we're running ahead, those 1, 2, 3, 4, 5, 6 buttons is actually slots in a comparison table. So it's a very quick access to comparison table function that you can use to quickly access, like quickly put this particular file current situation into the comparison slot. So it can be easily done so that you can even in the same file quickly change some parameters, make different scenario and put it into another slot. A comparison table then allows you to compare side by side different scenarios that you have put. But okay, so what do we have here? Nominal value of all investments, 12.3 million. That's how much all investments are. Required rate of return, 12%. Calculation term, 10.5 years. Calculation point, July 2021. Then present value of operating cash flow, 14.5 million. Then residual value, 500,000 in present value. And then total present value, 15 million roughly. And so our investments are 12 and something. So we have net present value positive 2.8 million. Nice. So then one of the comparison features that we advise to use also is this NPV as monthly annuity. So that means how much NPV does this project generate per month. So in this case, it's 39,000 euros per month is the NPV of this project, on average, of course. So you can use it to compare, let's say one project is 5 years, another one is 20 years. So you cannot just directly compare NPV, but you can compare NPV per month as one metric. Then internal rate of return is 15.75%, which is higher than our discount rate. So that's good. Modified internal rate of return is also over discount rate. Profitability index 1.23, more than 1. That's good. Payback time 9 years. Yep. So that's how many years it takes to pay itself off. Quite long. And then what else? What else? RONA, EVA, value added, and then discounted cash value added. So basically, let's say that we want to make some adjustments. Let's say we want to quickly go to income statement. Let's say we want to find out break-even price for kilowatt of electricity. Now, in the beginning, we've been sticking with this 14 cents per kilowatt hour. Let's say if you want to learn what is a break-even, how low can it drop? And all I have to do is just press one button to do it, or actually 2 clicks. So this button next to distribute button, there is this kind of break-even button. So I first select the cell. It's important to select the cell that, according to this proper modeling, that other cells depend on. So that this price per kilowatt hour, as you remember, our follow-up cells. Okay, there's something. Oh, well, doesn't matter. So other cells are depending on that one. So that means we can make some adjustments to this first cell, and it will automatically affect all others. So then we press break even, press OK. Oh, there's formula. Okay, something is not right. Just a moment. Okay, break even found. So basically, as you can see, it found 13 cents. It's it's hiding some tail, but overall roughly 13 cents. And if I go to result screen, so with the break-even function, it seeks 0 NPV. So value that gives you 0 NPV. So it just barely covers all the costs and returns required rate of return and no more. So that's, we know that, okay, it's so close actually. So we are actually very close to the margin. So that's why there's such a long payback time. And maybe based on that, we could consider like putting a bigger margin. Let's say that we want to put maybe 15 cents as a starting price. And then we distribute with 5% growth, distribute. Well, it was already 5%. But yeah, so we just give a bit bigger margin. Okay, and immediately this gives us 4.9 million NPV, 8 years payback time. Still long, but better. So again, this is just an example. You could also apply this break even to, let's say, wind power plant, wind turbines. Let's say how much is the maximum price we can pay for these turbines. Let's say they get more expensive. I just select this 10 million field, apply break even. Okay. All right. In just a few moments, it gives us 15.9 million is the maximum we can pay with that parameter that we have now, with all the other parameters, like including this 15 cents kilowatt price. But we can pay up to 15.9 million for these turbines, and it will still cover all the costs. So NPV will be 0. All right. By the way, there is also under format undo break even. You can actually return previous value, but only for one time. So in case you do 2 times break even on 2 different fields, it will forget the previous one. So careful. But of course, you can always just replace manually the value to whatever it was before. All right, so hopefully that's clear. So now we have adjusted something. We got 4.9 NPV now. And what else? So if I just were happy with this one, if we just go forward from here, so I just press next. We're taken to the sensitivity analysis section. I'll just check if anybody had any questions. No. Good. So the first is discount rate, impact on profitability. This shows you if they or how the change in discount rate will affect the NPV of the project. So now it's like 12%. What if it's 13, 14, 10, 9%? It shows you how NPV changes. You can also change it. Let's say you can manually put it. What if it's 16%? Will it still do it? So I have to then press update button. And now we have this. Okay, it's still profitable. 1.5 million NPV, still at 16%. All right. Okay, by the way, I'll quickly save the file just in case. All right, so then next, it does similar analysis to total investment. So again, what if turbines get more expensive or cheaper? How will it affect NPV? And not only you can see NPV, by the way, you can also look at the payback time, for example. So now we're looking at what if cost of investment changes, how will it affect the duration of payback? And here we go. So by default, it offers you -20, +20, -10, +10 deviation, and then you see. And also notice that here you have a drop downs. So you can actually select many different parameters that you could look at, including those from key financials, how those parameters are, changing based on this sensitivity analysis. So it's really deep analysis. All right, so, okay, similar way, I will just quickly scroll through. You can analyze income, variable costs, fixed costs, and then, okay, this is interesting, variables impact on profitability. So here you can select any variable from your whole calculation. Let's say only construction investments. So only construction, and they show you sample value for one of the months. But how does it affect the project overall? So you can even do that. And then you can actually have 6 of those here that are, you can use different variables. And let's say you like one of the parameters here. Let's say you like this analysis. You can actually use this camera button to take a snapshot of this chart. And then you could easily put it into, let's say, Word, and create a new blank file and paste it. Look, we have a nice, you can put it into email, into PowerPoint, anywhere you can paste a picture. We have a very nice looking picture. Notice that it actually deleted all the buttons. It's not just a screenshot, it's better. So it made a nice border around it. So it's ready to be put into our materials, whatever we have on our hand. And notice that these camera buttons are all over in almost all reports. You have them in all sections. All right, so that was the sensitivity analysis. Let's say we have still 10 minutes left. What could we do? Perhaps I could show you quickly comparison table. So let's jump to probability analysis. So this is the situation right now. Let's put it into slot number 1. So I've selected button number 1 in comparison table. We don't have one open yet. So let's create a new one. And it offers us to save it. So let's save it. And I will just use the same name, except for it's going to be comparison table. Enter. All right. So this is now taking slot number 1. And now we go back to the file and let's make some changes Maybe I could even save the file and then save it under new name. You don't have to do it, but just to be very careful, I put, let's say, what if we have one project with 15 turbines? I save it under 15 turbines calculation file name. Then I do some adjustments. Let's go to basic values. And I change the title to 15 turbines. Then let's go to investment table. And I change the investment from 10 million to 15 million. Maybe construction will also get more expensive. Let's put some more millions here. 1.5 more millions. Well, I'm improvising as well. And so we have some more investments, and we have some yeah, here income statement, all I have to do is just change 10 to 15, because we have linked everything so well. It automatically affected all the income in all periods and also the variable costs in all periods, because it's all interlinked. So it's very easy. Maybe staff costs, but maybe we could also have a little bit more staff costs. Let's increase it. All right, maybe that's good enough. So then let's go to results screen, and we already see we have 6 million NPV. That's good, but let's see if everything else is good also. And now I press slot number 2, or maybe I could also save this file before that. And slot number 2, and now we have 2 different slots, two scenarios, and let's look at them in a bit more details. Okay, I can also, by the way, hide empty, so we have only those 2. So 10 turbines, 15 turbines. Let's see. So nominal value of all investments. This one needs 12.3. This one needs 18.8 investment, because we have added some investments to construction as well. So that's a different capital requirement. Then okay, let's go straight to net present value. So 4.9 versus 6. From first look, this one looks better. However, if we look closer, we actually see that internal rate of return in the first case is 18.3, but in other case is 17. So that's actually return rate has decreased. That's actually, I on purpose added this a little bit more, proportionally more construction investment, just to make this case that you may be getting more NPV, but you're getting smaller IRR. So that means its efficiency has dropped a little bit. And even payback time shows that in first case we had 8 years, now we have 8.4 years. So we have to actually wait longer for this payback to happen. So this is important details. And you can easily see it when you compare it like this. So also in comparison table, if you look at this, you can see NPV, side-by-side comparison, IRR, and payback time. Okay, we have 5 more minutes. Maybe I could also quickly show you one more great feature is marginal effect. So let's say we have, actually I could do that right here. We can subtract one situation from another. Let's say one file has situation as it was in the beginning. Another file we have situation plus some additional investment. Like in this case, we could look at this 5 extra turbines as additional investment. And let's say we want to look at this 5 additional turbines separately from the rest of the project. Maybe because they're not proportional. Maybe in the beginning, they're added at 1, but then something else is added with other effects because, well, there's many parameters that go into it. So it's not everything, not always so linear. But this function allows us to see exactly the effect of that separate additional project by subtracting everything from one to another. So if something is the same, it will be zeroed out. If something is different, it will just show how much different it is. Okay, let's try to do it. Situation before investment, I have to look it up. It's this file, calculation file with 10 turbines right here. And then the calculation file after with new investment. And then I select with 15 turbines. And then I press create. So it now generates the file, a third file, which will be showing us only the additional 5 turbines separately from the first 10. It's very interesting because it's otherwise very difficult to achieve this kind of analysis, but with NS for Excel, these kind of things are very easy. Okay, it's a bit processor intensive. Let's give it a name. I'll get 5 additional turbines. Enter. 5 additional. All right. Look at the investments table. So what you have here is only the difference. So you see 5 extra million, construction 1.5 extra million, and nothing else. So connection to the grid is 0 because it's the same. It was not affected. Then sales, so only extra sales that we have generated with these 5 turbines are showing. Only extra variable costs and only extra staff costs. As you remember, I've added 300,000 to this in the beginning to the salary. All right. And then let's go to result sheet. Oh yeah, this working capital, like working capital effects, everything is taken into account here. And then result sheet, we see that, okay, it's profitable, but much less. So there is smaller IRR, but otherwise it's good. Let's put it under slot number 3 comparison table so we can even like closer look at it. So first is 10 turbines, original calculation, then 15 turbines, modified calculation, and then 5 turbines separately. And here we see why it has actually made this 15 turbine calculation worse, because these additional 5 turbines are actually not as efficient. They only give 14% NPV as opposed to 18 for the first 10. So that's exactly the reason why it has lowered this to 17. And also it has a longer payback time and so on. So yeah, the same way you could, for example, like opposite of margin calculation that we did here is a consolidation, which with which you can, for example, consolidate 2 files, like consolidation here. You can consolidate, for example, file with 10 turbines and 15 turbines. Let's say you decided to do both projects in different places, and then you just press consolidate, and it will show you a file which includes both calculations like in one, and you can then continue analysis on consolidated level. Okay, I will not do it, but hopefully you get the idea. Well, so thank you so much for your attention. We're at the end of our assigned time for this webinar. Thank you very much for your attention. Appreciate we have quite a good amount of attendees today, and I will be following up with all of you. I'll send you the files that we have created and also the slides, and I'll be happy to follow up if you have any questions about this this case, or anything else about Invest for Excel, about using it, about buying it, about installing it. I'm happy to be of your assistance. And I will be still available for a few minutes in case you want to send some quick question in the chat. But otherwise, thank you very much, and I wish you to have a great rest of the evening, and bye-bye. Okay, we have a question from Mandy Lowe about recording. Yes, I will be. I will send a recording as well, so in a follow-up message. Thank you very much. Very happy to have you, and come back for more. We'll have more. Thank you very much. Have a good one. We'll be in touch. Well, I'll be closing the session, so I really appreciate your attention today.